Happy Wednesday, traders. This is Jacey with Empire Algorithmic Trading, and it is time for Vwapvision Stock Talk. It's where we use the volume-weighted average price to make sense of this crazy market. So let's just get right to it. It's time for stock. Hello everybody, it's just JC today. Matt is going to be out for the rest of the week. So let's just start with the S&P 500. Quite an interesting session. When I saw it gap down, I saw it was down well over 1.7%. I was thinking, well, that's what resistance does, right? The stocks gap down, they tend to sell off right at resistance level. So I'm thinking resistance does what resistance does. And then as the market continued to rally, I started thinking, well, this is what rallies do, right? They start off weak, and then they get stronger throughout the day. And interestingly enough, it was quite fun to watch, particularly towards the end of the day. This is the 5-minute chart. As you can see, it sold off hard at the beginning and then just kind of slowly rallied throughout the day. And then in the last half hour, it just really popped pretty fast. So it was kind of fun to see. I was watching in real time as I was trying to look at some charts, and all of a sudden, some of my holdings went from negative to plus, and so it was always fun to see that. But whether we're in a green zone yet, I'm going to wait for the algorithm to tell me, because we're really close on this first day here. So if anything, it's not the most spectacular attempt at a green zone. Normally, there is a little bit more pop, but the fact that it was down 2.8% at one point, the Nasdaq was at least. The Nasdaq was down 2.8%. The S&P was down around 2%. For the S&P to close positive on increasing volume, that's exactly the kind of action you want to see right here. Instead of resistance pushing it down, we're seeing buyers come in and saying, nope, we're going to push this higher. Same thing, the Nasdaq composite was not able to close positive, but it closed well off its lows. Same thing with the small caps as well as the mid caps. And bonds are continuing to rally as well. So we're just going to probably shelve looking at bonds for the time being. That's comfortably right in the range where we want it to be. So we're just going to focus on stocks from here on out, unless, of course, that changes. Then we'll just keep paying attention. VIX did rally up big like you would expect. As stocks sell off, VIX tends to pick up. But it did exactly like the equities were doing. It sold off throughout the day. Just an opposite of what the stocks were doing. So let's just take a look at some charts here real quick, just to kind of get a sense of what happened throughout the day. And there's a common theme. You have some big gap downs with some strong reversals. Carvana gap down, I think it was down 3.3%. It was down almost 6% on the day, and it closed up 0.3%. This was a breakout for us last week. Same thing with Palantir, nice strong gap down and then a big rally throughout the day. Therapeutics, similar pattern, gap down and then rallied up throughout the day. And Zscaler, a very strong looking bullish engulfing pattern on Zscaler there. Sellers came in, tried pushing it down, and buyers are like not having any of that. They came in and just pushed the stock higher, breaking out of this long base right here. This sideways pattern has been going on for some time. So I didn't buy in on this one. Anyone watching this show knows I have a history with Zscaler, so I'm rooting for it. I just didn't take a roll on it this time. Mercado Libre, same thing. Opened down and then just rallied big throughout the day. A nice spike in volume on the session there. Eaton Pharmaceuticals, another breakout from a couple weeks ago. It's hitting new highs after its recent breakout. Similar pattern, nice long shadow at the bottom, gap down, sold off, and then rallied throughout the day. Niagen Biosciences, same thing. And Spotify. Spotify didn't quite open down. It opened right at yesterday's open, sold off just a touch, or yesterday's close, I should say, sold off just a touch, and then just bombed it out the rest of the day, completely made up all of yesterday's losses. This is the kind of strength we're looking for. This is the stuff that happens in good markets, stuff that happens in exciting markets. So by the end of the session, I was feeling really excited. Looking at these charts, similar thing. It's hard to not get the blood flowing a little bit, seeing some of these recent breakouts continue to succeed, like Netflix, for example. Pretty disappointed Netflix was not on the watch list, and my notes there, I was too chicken to buy it, but I'm learning my lesson a little bit. I let those early ones go. Yeah, it wasn't on the watch list. I just kind of saw this on a personal thing. But anyhow, Netflix is hitting highs. AGX, while it did trade off today, it ended up closing down just less than 0.2%. Found support above the VWAP and then just rallied throughout the day. That's a very bullish look, a potential shakeout. Same thing with Rubrik. Rubrik has been trying to break out, gapped down and then rallied up throughout the day. Robinhood, similar pattern. It gapped down. So even though these breakouts are testing, these are the kind of positive tests you want to see. This is the kind of stuff you're looking for if you hold a stock that trades down. Hood is still well within any of its loss parameters, so that's a still legit breakout. Same thing with Root. Root actually went the other direction. Root's in a little bit of trouble. I'm sorry. Root gapped down. It's closed down 7.5%. That triggers pretty much any sell signal you're looking for. So we're going to probably, this one's going to either find support down at the VWAP, needs to tighten up a little bit more, and then do another attempt to break out. HIMS, this is what resistance. This is what I was expecting the day to look like as the market opened up down. I was expecting to see something like this on the general market. However, HIMS obviously still has some work to do. And then same thing with Tempest AI. We were talking about that one setting up potentially for a nice potential breakout, but it too ran into resistance and sold off. So what you want to do is you want to wait for the stocks to clear those resistance, so then you can get the stocks like Zscaler, that broke out, cleared that resistance and continue moving higher, instead of trying to take a position on them before that move, because that just increases your odds of failure at that point. Shopify, same thing. It tried to break out, kind of stalled out a little bit, and then today traded down 4%. Now it's within your stop loss. It's 3.6% below its buy point. So you're still within loss, but it traded down pretty hard. That's a pretty ugly looking follow through there. Pretty disappointing response from Shopify. And then BYRN, Burna, I think that's how you pronounce that, Burna Technologies. This very well could do a nice shakeout here, opened down, shook it out, rallied out throughout the day, right at VWAP. 3 quick down days. If this thing rallies back up real successively, really fast, that's going to be a pretty aggressive buy signal there. So keep an eye on BYRN. And then, of course, on the downside, you got GeneDX. Reported earnings, supposedly strong earnings, but not strong enough. The stock was down a whopping 42%. This was a solid looking breakout. It had a nice pattern, nice wedge pattern, a good breakout. Had strong follow-throughs, and then earnings just killed it. So that's the risky part when you get into earnings season. So just beware that this is stuff that can happen. So in that case, you just got to sell it and then move on to the next one. Hopefully nobody put too large of a position in there, but I feel pretty bad for GeneDX Holdings shareholders today. Well, thank you very much for your time today. That is time for today's Stock Talk. And as always, you can follow us on patreon.com/Empire Algorithmic Trading for our daily buy and sell signals from our algorithm. And in the meantime, everybody, happy trading.